And not every strategy is automatable, as you can imagine. Trying to identify support and resistance levels is really tough from a coding point of view. Visually, it's easy enough to draw a line and you can say, hey, I want to set an alert at this line. When price action crosses this line, then trigger a buy or a sell order. You can certainly do that, but you're still like manually moving levels on a chart. And so
welcome back everyone. Today I'm sitting down with Matt DeLong. We spoke in 2019, so like actually 3 years ago, even 3 years ago, before COVID started and everything around. So we didn't have COVID back then, of course. He's a algo trader, algo developer. He's really good with coding algos and developing algos that are profitable in the market, in any market, cryptos, forex, and stocks and everything around. So Matt, how's it going today?
Yeah, man, it's been going great. It's haven't spoken to you in a while, so I'm glad that we get this chance to catch up.
Awesome. Good to hear you, of course. Today we'll talk about algos for sure, how to create them, how to develop them, how to fix them, whether they're not working well. So tell me a bit more about kind of what's been going on since we last spoke 3 years ago or so.
Sure. So last we spoke, I was building my own custom trading platform just for my own use. And we've since kind of expanded that now into a retail trading platform that anyone can sign up for. And the way it works is you can sign up for an account and you're able to connect your broker. We support a handful of brokers right now. We're adding more, but something like Robinhood, something like TD Ameritrade, and you basically connect your account and then you pick a strategy. We have a few house strategies that you're able to use. So you pick a strategy and you say, I want to allocate X number of dollars or X percentage of my portfolio, 5%, 10% to any specific position. And the signals come in and it places those buy and sell orders in your actual brokerage account. So if you have your Robinhood on your phone, you're able to follow along and see and watch what it's doing. And then you watch your account balances grow over time. So it's been pretty interesting. So we've kind of migrated away from a very heavy custom data intensive type platform to more of a retail type platform that the average person can use. And we do have like free trials and stuff that we can set people up with if they're interested. But yeah, it's gone really, really well. The original version of the strategy was like a long only, which works great in bullish markets, right? Where everything's going up, just buy on dips. And so we've kind of let's say, I guess it was October last year, maybe September, October, we launched a long and short version where the market or the bot will trade long and short depending on what the trend is. And it's done really, really well in the past 3, 4, 5 months since the market has kind of sold off a lot. You guys have seen a lot of tech stocks, Mongo database, Twilio, even PayPal, Square. A lot of those are down 40, 50, 60, 70%. And so the bot flips short when the trend starts selling off and it starts shorting and making money on the way down, which is pretty, it's pretty helpful. Like the average mutual fund can't do that, right? The average, old school investment tool of like our parents and our grandparents' age, that you can't do that, right? And so it's pretty neat when you can show someone that they can make money on the way down using an automated tool like Traders Post. Yeah, so it's been super fun and exciting.
Interesting. So you mentioned the algo first was only able to buy. Is there a reason for this? Is it because like you didn't develop the way to sell first, or is it just because you thought the algo would make more money by just going long instead of short?
So in a bullish market where everything goes up, there's really no need to short, right? And then somewhere around the middle of last year, someone asked me the question. They said, well, Matt, what happens if the market just sells off? Which I'm like, of course that could happen, but it hadn't happened in a while, right? It wasn't like short little week here to no big deal. And so the timing was like perfect that we were introduced this back September, October of last year. And really, Etienne, like, as you know, there's certain types of accounts that you can go long only. So like a retirement account, a 401k IRA, those are long only accounts. Of course, you can buy leverage ETFs or inverse ETFs like SPXS and TQQQ. And so there's different things you can do, but you're still long a short, you're kind of long an inverse ETF, right? And so the idea is like in a retirement account where you can just buy, you can't really short, traditionally short. That's kind of what the original version of the algo was created for retirement accounts. And eventually, maybe in the next few decades, we want to put a lot of the mutual fund companies, the old school investment vehicles, we want to put them out of business and have some kind of a replacement tool like this that can trade in and out, can lock in gains as long as it's trending higher, it's going to be bullish. If it starts trending lower, it's going to get short. So yeah, that's the short answer.
I know we discussed last time about algos and like creating them. I think you mentioned the fact that algos cannot be doing the same thing as like a manual trader. So you can't use the same indicators and tools to do the same things because otherwise you kind of lose your edge. What are some of the things that the algo is based on? Is it indicator? Is it kind of just price action or something different?
Yeah, so we have different strategies that work a little bit different. We have created some like a strategy. We'll just call it trend following, just to not give away the secret sauce. But it's a trend following strategy. We have some that work on different time frames. So some that are work on like a 30-minute chart, some that work on a 78-minute chart, and there's time frames in between. And so we've created a tool that can go back in time in 4, 5, 6 years and run tests to see what time frame works best on certain stocks. So for example, stock A might work better on a 15-minute chart, where stock B might work better on a 78-minute chart. And it's the same trend following, where it wants to be in the trade and stay in the trade as long as possible. And all the ups and downs of the drama of the normal price action in a day, we want to stay in the trade as long as possible. So stocks, not all stocks trend well on different time frames. So for example, a company like Apple, you're just better off buying and holding it. And so the tools that we created and the testing tools will tell us what works better on certain stocks. If you just want to buy and hold Apple, that works best versus trading in and out over time. It works the best to just buy and hold Apple. And so we have this like A/B type split test where it'll tell us over whatever time frame we're testing, it's better to run this strategy, this trend following strategy versus buy and hold. And things like Square, buy and hold over the past 6 months to a year is down significantly. PayPal down significantly. Mongo database down significantly. Twilio, blah, blah, blah. Same thing, all down. However, if you're trading long and short in some of these same stocks using our trend following strategy, we're able to lock in some pretty sizable gains where the rest of the market is just, gone lower. And those portfolios, long only portfolios, have continued to decline. The last few, week or so, it's got a little pop, but so yeah, it's done really well for us.
What kind of time frame do these algos look at? Is it only like a daily chart? Is it like different time frames?
They look at different time frames depending on which one you want. So something that's like aggressive and volatile, you're looking at usually like a 30-minute charts, making decisions based on a 30-minute chart. For a little bit longer term time frame, it's 78 minutes in dailies. Yep. Yeah, sometimes they mix time frames too, right? We're looking at time frames on we're looking at trends on multiple time frames and then making a singular decision.
This is good to talk about too, because you mentioned you have multiple algos running now. Do you consider yourself to be more like an algo trader or more like an algo manager, where you manage different algos in your business?
So the algos trade for me, and I'm always testing and trying new ideas to see what strategies have some kind of feasibility. As you probably know, when you're building something and testing it historically, that doesn't automatically mean it's going to work in the future, right? So I can say, hey, Etienne, I have this great strategy. It's worked great for 4.5 years. The moment you try it, it starts losing, right? And so you're like, well, great, Matt. Thank you so much for your help. It's like, yay. And so what we do is we have a process where we test it going backwards, but then we also test it. We do some level of paper trading and then live trading on smaller levels, and then introduce more and more capital to it as it continues working. And so we found that to work really well. As you know, running a back test is all historical. It's all looking backwards. Whatever's worked in the past doesn't automatically mean anything about the future. So that we just have a process that we follow. But to answer your question, I guess I'm kind of a mix of managing and trading algos. So, yeah.
What would you tell people who, let's say, join your algos? Because some people might be tempted to, they just like buy into the algo. They just put all the money into it right away because they want to make money fast with it. How do you tell them to kind of deal with that? Because of course you could kind of hit there and then the algo starts losing money, or like just being a normal drawdown for that month or so. What do you tell them to do in terms of capital?
So typically what we do is if someone has an account just dedicated for the robot, the algo, what we'll do is we'll say, hey, this strategy uses, let's say it trades 15 positions or 6 positions, whatever. And what we'll do is we'll try to have a smaller allocation. So we're not using 100% of the account initially. So typically I like to use 60 to 75% of the account. So let's say that, for example, I have a $50,000 account. And what I want to do is if I have 6 positions, I only want to allocate 10%. to each of those 6 positions. So when it's fully invested, it'll only use 60%, right? 60%. And so as that starts winning, we're going to slowly increase that 10% per position to 12 to 15. And we slowly ratchet that up so that we got some gains locked in along the way. But then also, if you're using a cash margin account, if you want to use full margin, you can go up to 200%. Obviously, I'm not necessarily recommending someone do that or don't do that. It's a personal decision. And so in an account where you specify how much you want to spend per position as a percentage, you're able to go up to that 200% maximum, max allocation. And then the cool part is that as you know, there's using margin is a double-edged sword. It's great when it works, not so great when when the trades aren't working for you. You can kind of grind yourself to a pulp really quickly. And so we do keep an eye on those and kind of help our customers manage those decisions on when to increase, but we typically start slower, kind of very, very mild, and then get more aggressive as they've been a customer after a few months of wins and they're comfortable with it. That's typically how we approach that.
How do you monitor your algos? Do you look at the trade on a daily basis, see every trade taken, or do you look at it more on like a bigger picture, like every month, every quarter, to look at the results?
Yeah, so we actually do. We have a mentor group that we do with anyone who signs up for an annual license, and so we actually every other Monday. So next Monday, not today, but next Monday, we kind of follow up with all the results, and we have just a webinar where we go through it in 20, 30 minutes, talk about the performance. We talk about things that we've, like things that are coming up and say, hey, you know what, this stock has earnings, so it's going to automatically exit the day before earnings. So we don't hold over earnings, but it'll manually send the signal to all the subscribers' accounts. So if we say, hey, this, Mongo database has earnings coming up on X date, we can send a signal to exit everyone's Mongo trade, and that signal gets replicated inside each of the subscribers' accounts. So if let's say we have 600 subscribers to that strategy, it'll send an exit order on for all of those 600 subscribers in each of their accounts. So we can do it that way. And then also our customers if they choose to, they also have the option to manually exit things. So let's say a trade's up 60% in 4 days, right? They're able to manually exit that if they want. They can continue using the base strategy if they want, but they can also manually lock in gains. So sometimes we'll see 15 positions, they all turn green and they're all up massively. That might be a decent time to consider locking it in. The base algo will continue following the trend, and sometimes they go higher, sometimes it reverses. But that we give options to our customers to manually exit if they want to lock in gains as well. So yeah.
But do you personally look at the results yourself? Do you look at like what's happening, what trades are taking yourself?
Yeah, absolutely. So we actually have a company account that runs the same strategies live in a live account, and we monitor those. And so those have done really well. But yeah, absolutely. We absolutely eat our own dog food.
I know a big factor into what makes people scared of algos is like how to know when things are not going well, how to know when things are wrong and that you have to tweak the algo. Can you expand a little bit on like how you would know if the algo is not performing properly now and that you have to fix it or something?
Yeah, so there's really two things we think about. One is, is it performing correctly, or is the market conditions just change? Because the market conditions change and we update the algo and then they change again back to how it was, you're going to have this constant up and down. And so typically what we like to do is if you have a losing streak, we'll take that allocation of maybe 100% of the account and start slowing it down or maybe reducing it a little bit. That way you still have some skin in the game, as you've seen last week, where some of these tech stocks finally get a little pop, not huge, but a little pop so that you're still in the game. What we see a lot of times people will do is they'll want to get super aggressive early on, and maybe a strategy wins 8 out of 10 times, right? So maybe it's 80% win rate, just as an example. And those first 2 trades are big losing trades. And then someone will want to pause it. And then we're like, well, it'll never be able to fight back. And so we've seen some, 10, 12% drawdowns. And then we've also seen 30, 35% gains after that. So after you would have, paused it at some small drawdown. So we've seen that as well. But each customer has settings where they can decide how they want to allocate their funds. If they want to always spend $20,000 per per position or X number of dollars, or a percentage. Percentage is as the account grows and it snowballs over time. A 10% spend as the account grows, it's still 10%, but the dollar amount being used to per position will increase as well. So yeah, there's a bunch of different ways to configure it. So each person does it a little bit differently. We monitor like how the base strategy performs, and then from that, each customer, if they exit manually or if they say, hey, I want to use full margin, they typically would kind of outperform the base strategy. But those are all decisions that they're able to make. So yeah.
How do you know if the market is changing? Is it just a trend? You look at volatility. What are some things or some hints that you can see the market is changing or different?
Well, so the market is always changing, but I would say when you have stocks that are below their 200-day simple moving average, that's kind of the first thing just anybody looking at a chart can determine. And plenty of stocks, Fastly, Pinterest, Square, a lot of them are significantly below. And so those are the types of things that you can look at. We typically don't like to retool the algos. We may tweak something here and there, but we don't like to necessarily rebuild them because the way that these work are trend following. So they're going to follow the trend. Where you do get caught in a drawdown is if you have open positions that are all bullish, and then the next day everything gaps down lower, and then it switches to short, and then the next day it gaps up higher, and then it switches back to long. That chop during that period, you're going to get caught in a drawdown, and it's just that's just the downside of the strategy. But once the market picks a direction and goes for 2 or 3 days, you're going to start winning back easily just in a few days. And I'm not sure how familiar you are with trend following, but one of the cool things, the trend following strategies that we build, is that as long as the trade is still winning, it's going to continue in that trade. And at some point when it stops winning, the trend is your friend until that bend in the end, right? So as long as something, if you're long and you're bullish and it starts continuing trending higher and you stay in the trade, it'll stay in that trade. However, if it starts breaking lower, at some point the trend ends and it just exits and takes a gain and then waits for another signal. And you're able to trade long, short, long only, short only, or both directions, either one. And that's a personal setting that you can make. Obviously, in a retirement account, you can pretty much do long only. If you have a cash margin account, you can do long and short. If the markets are just selling off like crazy, like COVID, you can choose short only for a period of time if you want, and only look for the short trades or only look for the long trades, or a combination of both. Yeah.
What would you tell people who want to jump into algos? Like they want to be able to not trade manually, for example, but they want to be able to code their own thing and kind of have the algo running. What would you tell them to focus on? Where can they learn and kind of get used to that?
Yeah, so part of what we do is we use some testing tools that are built into Tradingview, like Pine, and so we're able to code it ourselves. There's really, from our point of view, there's really two things. One is you don't have to be a coder to use one of our strategies. You can just subscribe to a strategy. You do have to have some technical expertise in order to write your own code, right? So like the EAs and MetaTrader, you have to be able to know how to do that. You have to be able to understand the syntax and the code. We use Pine a lot for Tradingview, and so we're able to connect Tradingview to our tools, and so that's your question was where to start. I think Fiverr. I'm sorry, not Fiverr.
Oh yeah, like Udemy or something, right?
Udemy, yeah, Udemy, yeah. So I actually took my very first algo class. It was like, I think it was like $300, and it was like 90 hours, and it was MetaTrader 4, so it was a few years ago, and I have a software background, so I can understand the concepts, the lingo, the syntax. It was not that different than what I was used to. However, someone that knows nothing about technical and all that, it's going to be a little bit sharper of a learning curve, as you already know what I'm talking about. It's a little harder of a learning curve, and so what we try to do is remove some of those barriers in this product where we're able to, you don't have to know code to be able to use automated trading. You can simply build or you can simply subscribe to one of our strategies. We have a few to choose from, and then allocate how much dollars and connect your broker account. You can do that without knowing any code. That's fairly easy to do. We have someone can walk you through how to set that up. But then if you want to build your own strategies, you want to play with this, you have to have some technical expertise, of course, to write your own code to build strategies, and not every strategy is automatable, as you can imagine. Trying to identify support and resistance levels is really tough from a coding point of view. Visually, it's easy enough to draw a line, and you can say, hey, I want to set an alert at this line. When price action crosses this line, then trigger a buy or a sell order. You can certainly do that, but you're still like manually moving levels on a chart. And so there's different ways to do it. But if you want to get into the thick of it, you're going to have some technical expertise. Yeah. Or lots of hours that you're willing to learn. Yeah. Yeah.
You mentioned you do your testing on Tradingview. Do you feel like Tradingview has enough data for you to test your algo properly?
I do. It depends on like what the strategy is, but we've run many years worth of tests, and it's very, very quick. My automated system that I built, I would have to run tests overnight because it took forever to run, just because you're working with massive data sets. And so I would schedule tests overnight and then look at them the next morning once they were run and see what happened. Where in TradingView, literally just a few seconds, you can run some tests and you're able to see the output. You're also able to see the performance, a bunch of statistics of win-loss rate, when you win, how much you win, when you lose, how much you lose. And then it also does that split test of how well did that strategy work compared to buy and hold, right? Buy and hold might be down 30% on some of these tech stocks or 40 or 50%, whereas this strategy might be up 70%, right? And so you're able to capture all those statistics, all the data, and then also lists out a whole bunch of trades that you're able to export if you want to play with it in Excel. You're able to do all that. And so, yeah, that's you can't run like 20 years of data intraday on TradingView. That is one of the limitations. But we can usually run a few years fairly easily, just in a few microseconds. So, yeah.
How do you know from the stats that a strategy is good enough for you to use? Is it what you look at? Is it just the win rate, the average win, profit factor?
So first of all, I want to make sure it can beat the buy and hold by a wide margin. It can't just be like 1% better, So for example, if I say buy and hold is 20% on Apple, my strategy needs to beat it by about 3x. So I'm looking for at least 60+%. And so that's one of the things I look for. We also look at the equity curve to see whether or not one trade made some huge difference, right? And as you can imagine, if there's some hiccup or something in the system and you miss that one massive trade, would the rest have been profitable or just been break even, right? That's the kind of stuff we look at is this one trade? So we look at the equity curve to make sure that it makes sense and it's just generally improving and increasing. Obviously, you're going to have some dips and stuff along the way. But if there's like massive AMC trade or GME, some of these meme stocks, if you just didn't get that one massive one, then the rest of the strategy, wouldn't have worked well. We look for those types of things, those anomalies, because as you know, there's some massive moves sometimes in some of these stocks, and you can't really bank on that happening every year, or every week, or every month. Those are just once in a while. And so we try to remove those types of things to see how well it still would have performed without some of those anomalies. Because at the end of the day, what we all want is the predictable type trades where I have a high confidence that this trade is going to win, 7 out of 10 times, that kind of thing. And when it wins, it's going to win, 4 times as much as it loses or whatever those numbers are. So, yeah.
So you're testing a strategy on each stock and each index that you want your subscribers to trade, or are you just testing a few and then offering more?
Right. So we have a few different strategies. One, you can pick what stocks you want to use it on. And there's another one where you subscribe to it, and then we manage the stocks that that it trades, and we'll rotate some of those stocks in and out. So, for example, we noticed in the beginning of this year, some of the stocks that we were shorting, a lot of our subscribers are getting rejected orders. Well, we're like, okay, go ahead and join the hard to borrow program. For most brokers offer that for free or cheap, a few pennies on the dollar. And then even though our traders did that, our subscribers did all that, we still were getting rejected orders. There just weren't enough, shares to borrow to short, like Open Door Technologies, for example, ticker OPEN. And so then we just found a different one to rotate, to rotate in and out. That was much easier. It wasn't hard to borrow. And so we're able to, then get more consistent wins. Because you also have to imagine, Etienne, if you're trading a list of stocks, and you got 6 of them, and 2 of them you can't short because you're getting rejected orders for whatever reason. your equity is going to be very different than what the base strategy was using, where the base strategy says, oh, we were able to short, our account was able to short, your account wasn't. And so then you have this divergence of, your performance is now very different than my performance, right? As the base strategy, because your account, you weren't able to short it. In my account, we were, and so those are the types of things that we monitor. We do have a managed strategy where we manage the tickers, and we have another one where you can choose from a list of what stocks the strategy works well on, which ones you want to trade. So we have some variations of that. Yep.
Cool. And of course, all those have been tested. You tested on all the stocks you offer, right?
Absolutely.
I think for a lot of people, the testing part is tough, which makes you definitely easier for sure. What kind of platform or service do you use for your algos on TradingView to be able to take trades in different brokers? Because you have to connect both in a kind of separate, like different platform.
Yeah. So this is actually where our platform excels, is we actually built our own platform. It has about 2 million lines of code. And so what you do is you do a sign-on process with your broker, and you do a sign-on from inside our account, and you create an account with us, and then you sign into Robinhood, or you sign into TD Ameritrade or TradeStation or whatever broker you're using, and then it connects the two, and then it gives the APIs and the back end tools that we built the ability to inject orders into your account. And so that's how that works. We're not necessarily connecting TradingView right to your broker. We use TradingView for testing, different testing tools that they have, and for just quick, like we'll say rough draft of strategies, we're able to kind of crank out some strategies pretty quickly and do that fairly easily in Pine. And so we'll run those strategies to test them, and then we'll build them out. And that's simply how that works. And we're able to use our platform to connect all these different brokers. We're working on new brokers. We're working on, we got futures almost completed. We're working on an integration with Coinbase Pro for crypto here. That's coming out in a few months. We have options that we're working on. We have options in TD Ameritrade, about 95% live. So yeah, all kinds of stuff that you can trade in this platform. It's pretty neat how it all works. So it's a beast of a code base. So yeah.
Yeah, it definitely takes time to code all that, I'm sure. Do you do all the coding yourself, or do you have any developer working for you?
Yeah, so we have a team of people that do it. It's 2 million lines of code is way bigger than any one person can manage. You gotta have many people working on that. So yeah.
So a lot of people want to be able to code their strategy, but then they don't know how to code, so they want to hire someone to do it for them. Easy for someone to do, like do you have to, if you tell them the rules, can they code it, or is there do you have any tips on how to tell them what to do and what to code?
That's a great question. There's plenty of people on Fiverr and Upwork who can build that stuff for you. What I found is a lot of people are unhappy with what gets built, because people don't realize that, if you tell algo to take a trade on a certain setup, it's going to take every single one. So then you got to write rules. Okay, in certain conditions you do it, in certain conditions you don't, and so it becomes a lot more complex than people realize. These things aren't 5 lines of code. I wish they were simple, but they get complex really, really quickly. And so, as long as you're able to explain it and do your best to communicate what the strategy is, you can get a working version. Whether or not you're happy with that working version is something else. But there's even on Upwork and Fiverr, there's plenty of people who build the EAs for MetaTrader. You can have people who write code for PineScript that runs in TradingView. Thinkorswim has ThinkScript is their coding language. So there's people there who can build that. So it just all depends on what you want to do and, what your budget is for those. But as long as you can communicate what you want and you find, 1 or 2 decent people who can build it for you, you should be at least getting going in the right direction. It doesn't necessarily mean you're happy with the output, but yeah.
Yeah, like you mentioned, it's not just the setup itself, it's more like the context and what's around it that sometimes matter in trading a lot. Do you have any preferred language that you'd like to code in terms of algos? Is PineScript is your favorite, or do you like MT4 better, or something else?
They're all different. They're very different. Like if you want to have any kind of machine learning or whatever, you're going to have to use like a Python or something like that. You're going to for just basic, simple strategies that just play price action. We can do that fairly easily in MetaTrader and or in PineScript in TradingView. But it really all depends on what you want to do. So if you wanted to build some massive machine learning thing, you can set that up and then send the buy and sell signals to our platform that then integrate your whatever brokerage accounts you have and use all the settings and the account allocation tools and all that kind of stuff. But it really depends on what you're trying to do, like what you're trying to build. So
well, we covered a lot here. Anything else you want to talk about or focus on?
No, it's just super fun. I love doing this stuff. Spend lots of time all day, every day. Yeah, man, thanks for having me.
That's awesome. So what can people find you? Then I'll connect with you or reach out after the interview.
Yeah, you can find me at by email at Matt, M-A-T-T, at reallifetrading.com or on Instagram or Twitter at Matt DeLong90, Matt DeLong90.
Awesome. We got to talk a bit more about that. So you work a lot with Jeremy Newsom, who's someone I interviewed a couple of times here on the channel, of course.
Yep.
What's the kind of work you do at Real Life Trading? What do you focus on there?
Are you talking about what is my role or what does the company do?
What is your role? Yeah.
Yeah. So I oversee all the technology, of course, right? So I'm the chief technology officer. I started working with Jeremy in late 2019, and I came alongside him, and we've kind of 5x this company over the past couple of years. And so we have many websites. We do lots of live events now. We actually rented a yacht, a 170-foot yacht in June. So we're cruising Croatia if you're available. Yeah, so come hang out with us on a 170-foot yacht. And it's pretty cool because it was built in 2020, and the owner gave us like a half price deal because it sat in dry docks for about a year during COVID. And so he's like, I want to start, chartering this. And so we got a pretty killer deal on that. So that's super fun, super exciting. And we're also working with, we're going into some other countries, teaching trading in other countries and other languages. So for example, in 2020, we launched real life trading in Australia. So we have boots on the ground there in Australia. And then in 2021, last year, we launched real life trading in India, real life trading in Denmark, and then real life trading in the United Kingdom. And so they're converting all of our training education to the local native language. We have people on the ground there. And so even in Denmark, we're selling products and services and using their currency and their, all the localized type things. So it's super cool to see all of our training kind of converted to other languages, which is, one of my big ideas to get about 15 of those out there. And we've kind of already started scratching the surface on that. So that's super exciting. And then we're also going into some emerging markets, some companies, some countries that are still trying to stabilize, some South American countries where we're going into, like in the summer, we're teaching 200 high school students how to trade Forex. And we're using like a prop firm, like funded accounts. And so we're launching that here this summer. So that's super exciting as well. Some of these kids have really, little to no economic opportunities outside their local village. And so we're partnering with some schools there. We have some partners on the ground who actually build schools, and we're helping them come in and kind of shape some of this curriculum, of course, in their native language as well, and put some tools together for them to help see, outside the local village and the mud huts, like what else is possible in the world. So that's super exciting. We do that through we're doing that through our nonprofit Real Life Foundation. We launched that last year. We were able to last year raise almost $100,000. We did some dinners and stuff we're helping support ending human trafficking. And then we did a few other small fundraisers for the LLS, which is the Lymphoma and Leukemia Society, and then a few other fundraisers that we're able to do. So yeah, close to $100,000 last year in our fundraising. And a lot of times we just give back to the world. We're trying to be a force for good. It's not really all about making tons of money and all that. If you die lonely, you die unfulfilled. And so we're trying to make a difference in the world using the things we've learned and the wealth that we're building to help other people and make a difference, make some impact. So yeah.
That's really cool. We're gonna talk about this for sure next time. Again, I'm sure that's really awesome. I didn't know that was so big and so amazing. So I'm really glad to hear that for sure. So I appreciate it.
It's definitely big and amazing. Definitely. Yep.
Awesome. Well, thank you, Matt. I appreciate your time as always. I think the advice you gave here was really good for people to learn algos and kind of start with that. They can check out your traders post also where they can get the algos. I'll put a link below the video for that for them to check out. And thank you. I hope we catch up pretty soon.